Nick, you delivered a bombshell speech in Melbourne. We've seen heads roll. We've seen so many CEOs exit this industry. I've never seen the number being so great in a short time, because shareholders have said, look, the gold price has risen and your equities have fallen or haven't actually followed suit. Therefore, we want a new approach. You have got this review now.
We're going to look at every single asset and say, first of all, is this asset making money for us? Or is it just an ounce machine? Is it ounces at any cost? And we should actually not be afraid to say maybe we should produce less ounces but be more profitable than what we were producing more ounces. And again, this has been a no-no for the industry. Everyone's been afraid to drop their production estimates and targets, even though they have revised their guidance a number of times. So that's the first key part of it. Looking at all of our projects, can we do all of these projects first of all? What sort of sequence should we do them in? Should some of these projects not be part of Goldfields? Now let's critically evaluate whether these projects are going to add value. Are they going to give us a return on our capital? Are they going to give us a reasonable payback? Are they going to improve the quality of the portfolio? And being more rigorous and tougher on all of those allocation decisions, because the other thing is we've only got so much money to spend. How do we allocate the limited pool of funds that we have to spend? And this will help us to focus on all of that.
And big used to be beautiful. You're now saying small can be beautiful as well.
If you make money, people are very happy. Look at companies like Randgold. Now, Randgold is not big, but it's the most highly rated gold stock in the sector. It is able to generate returns for shareholders on a repeatable basis.
And you were saying that perhaps there should be more of a private equity type approach to gold mining in South Africa. What does that mean?
It means you've got to be ruthless on your allocation of money. Is that you've got to earn the right to spend the money. Is that you shouldn't just put the money in because you think it's a good thing to do and you're going to keep the mine going. Oh, we need another year of life, so we put the money in. Well, is that money going to give you a return? Could we deploy the money better elsewhere in the business, in a limited pool of money scenario? And it's that kind of, that's what private equity is all about. And I'm not saying we're going to go the whole hog in terms of private equity, but it's about getting some of those concepts more crystallized in our managers' heads. We do have to change what we're doing. We have to be more ruthless about every rand we spend, every dollar we spend, and we've got to work out how that's going to drive value for the group. If you look at all the projects that have been deferred, you've seen Donlin Creek being deferred. In the base metal sector, you've even seen Olympic Dam deferred. $20 billion project deferred. We've seen Serica Solid deferred again. We've seen Lobo Marte deferred. A lot of other projects are not going ahead. Tasiast is now going to be half the size it was originally anticipated to be. It's already starting to happen, but I think the trickle is going to turn into a stronger flow over the next year or two. And that's going to change the dynamics of the gold industry, and it's probably going to change the supply-demand side, and that's going to be quite interesting in what it means for us.
And just the final word on your dividend position. External studies show that you're in a preeminent position.
It's a natural extension of our focus on the all-in costs. The focus on the all-in costs is to drive free cash flow. If you drive free cash flow, you can pay dividends. And that's what we're doing. So it's all a natural sequence, and it's what we've been planning to do for some time. And the stats, I think, show that over the last 5 years, it's not just a flash in the pan scenario. We're right up there on top.